If you've ever glanced at a crypto price chart, you know that feeling, right? That mix of, wow, this is amazing, and oh no, this is terrifying. The price swings are just wild. But what if I told you that volatility, the very thing that freaks most people out, isn't really the enemy we think it is? We're going to break down how an industry insider sees this whole thing, and honestly, it might completely change how you view the market. So our guide for this is John D'Agostino from Coinbase Institutional. And to really get why he's so calm about crypto, you got to know where he came from. He cut his teeth in the wild world of commodities trading. Think the New York Mercantile Exchange. This is a guy who's seen markets so chaotic, he says they make Bitcoin look like, and I'm quoting here, baby time frolics. So the idea here is pretty simple. We're going to take the lessons learned the hard way from that old school world of physical stuff and see how they map onto this new world of digital assets. Because as it turns out, the basic rules of how markets breathe and move, they don't really change. Okay, first things first, let's talk about the elephant in the room. The thing that gets all the headlines and gives everyone heartburn, those huge, massive price swings. This is the million-dollar question, isn't it? We've all been wired to think that a chart going up and down like a roller coaster means it's super risky. But is that actually true? Let's poke at that idea for a minute. Well, if you ask a professional trader, the answer is a hard no. They see volatility and risk as two totally separate things. And, getting this one mental shift right is probably one of the biggest steps you can take as an investor. Okay, so check this out. Just imagine you have two options. Asset A is all over the place day to day. I mean, it's a bumpy ride. But over the long haul, the trend is clearly pointing up. Then you've got asset B. Super stable, barely moves, but it's slowly, steadily bleeding value. For a pro, this isn't even a question. They'll take the volatile ride that's actually going somewhere. Now let's bring it home. Think about your own retirement, your savings. If you know that inflation is quietly eating away at your money every single year, which of those two assets is the real risk to your future? D'Agostino's point is that if your money isn't growing, the most dangerous thing you can possibly do is just play it safe and avoid these kinds of assets altogether. All right, so with that new lens on, let's look at what's actually been going on in the market. That big sell-off we saw, it wasn't just random panic. When you look closer, there were some pretty clear reasons for it. It basically came down to three main things. First, the market was just gassed. Simple exhaustion. After a crazy, massive run-up, things had to cool off. Nothing goes up in a straight line forever. Second, you had what's called OG diversification. Basically, the early crypto investors, the whales, were finally cashing in some chips to buy houses and diversify. Can't blame them. And third, the news just quieted down. The rush of positive headlines faded, and the market kind of took a breath. Okay, but here's the key. While literally everyone else was glued to the falling price, the pros were looking at something much deeper. They were looking at the market's structure, and that's where the real story was unfolding. The price is the flashy signal, right? It's what you see on TV, it's what triggers our fear, our greed, all our emotions. You can't not look at it. But the substance, the actual long-term health of the market, that's all in the structure. Are more people using it? Are different kinds of institutions getting involved? Is the underlying plumbing getting stronger and more reliable? That's what really matters. So get this. While prices were dropping, look at what was happening under the hood. You had giant banks like Citi and JP Morgan actively building on the technology. You had a central bank in the Eurozone saying, yep, we're going to put Bitcoin in our treasury. You had the Harvard Endowment, some of the smartest money on the planet, revealing they own more Bitcoin than gold. The variety of players entering the space was growing. That is a sign of a really healthy, maturing market. And this brings me to my absolute favorite line from all of this. It just sums up the professional mindset perfectly. If you've done your research, if you believe in the fundamental value of something, a price drop isn't a disaster. It's a sale. Okay, so this all sounds great, but how do we actually put this into practice? Well, it's really about acting like a professional with a plan instead of just reacting to the headlines. And here it is. Rule number 1, the absolute best investors on earth do not try to time the market. D'Agostino says he's worked with them for 20 years, and not a single one thinks they can perfectly pick the top or the bottom. It's a loser's game, and the market will humble you fast if you try. So what's the alternative? Something called dollar cost averaging. And it's so simple, it's almost boring, but it's incredibly powerful. You just invest a set amount of money on a regular schedule, say every week or every month, no matter what the price is doing. It takes all the emotion and guesswork out of it. You stop trying to be a hero and just participate in the long-term journey. All right, let's zoom all the way out now. Let's get away from the charts for a minute and talk about the big picture. What is the ultimate point of all this technology? What's the grand vision? You can really break it down into a two-part dream. For Bitcoin specifically, the goal is to be a savings account for the world, a way for anyone, anywhere, with just a smartphone to protect their wealth in something that can't be created out of thin air. And for the rest of crypto and blockchain, it's about opening up the financial system, giving that same person a cheap, easy way to invest in the world's most powerful economic engines.
And that leaves us with one last kind of wild question to chew on. When you strip it all away, Bitcoin is just math. It's a protocol. We don't get into heated arguments with our family over the Pythagorean theorem, right? So why has this one specific piece of math become so emotional, so polarizing? Now that's a question we're thinking about.